it does make the surprise element a possibility. It makes it even a bigger possibility than normal. Because with 58k jobs, if we get 158k, that's going to be a whopping surprise for the markets and not an unrealistic number to achieve. And also, if we get less than that, I would say it's going to be pretty doom and gloom for the US economy. The US dollar will very much contract and shrink as a result of that one. And we could see some pretty decent short selling in the US pairs, USD yen in particular. Now, I know this is a non-farm payroll live trading event. I do appreciate that, but unfortunately, there is other news, and it does dwarf today's NFP in comparison. As it stands, of about 2.5 hours ago, it looks as though the entire Middle East is going to war. So things are escalating. I mean, really, really escalating. The US won't back down. Trump is now increasing his threats with additional firepower heading over that way, and they're going to increase the rate of fire in which they've had in sort of line of the up until this point in time. And now we've got the rest of the Middle East who are all sort of chomping at the bit to get involved. So now we're having this is a really serious matter of a multi-nation combat situation, ultimately. So, yeah, my brain's a little bit confuzzled at the moment. I've been working tirelessly this week, to be honest, and rebalancing things in preparing for what I believe is going to be taking place over now the course of the next couple of months at least. And a lot of defensive things. I've been quite offensive in some others. But yeah, it really is. It's escalating. It's escalating out of control now. Loads and loads of people are getting involved. So we're going to have nations that are going to war that haven't even been to war for a long time. For a really, really long time. Some of those nations, obviously, they've been in war for generations now, and that's what they understand. But there's some nations out there that are going and getting involved with military aid and so on and so forth that haven't actually had a conflict for a really long time. So, the markets at the moment are going to be spiraling. And as a result of this, of course, we have to take that into consideration when thinking about today's data. The employment data for the United States is going to pale in comparison to what is going on in the broader market context. Now, as we have it here at the moment, oil is trading at, this is UK Brent, oil benchmark is trading at 88.90. Had a whopping week this week as the demand vacuum continues from the tensions. We have seen, that's incorrect. So from the gap up, so that there was the close, and then we had the open here. And so far this week, we have climbed 18% in UK Brent. As far as US crude is concerned, and look at the size of this thing. We've climbed over the course of the week 25.4% up, and this won't stop. This will not stop. The oil demand will continue. It should continue. So we're probably now looking at a situation whereby over the course of the next coming months, we will see oil breach the 95 point, and it will rally all the way back up to around 115 to 120. That's going to be my bias. I will put my name against that if tensions do not ease and if the thing continues going the direction we think it is. Money-making opportunities will be prevalent in US crude and UK Brent. So we can certainly discuss that next week. We won't be touching this with anything at all at this moment in time in this week, of course. But there will be opportunities coming through thick and fast with regards to how we push on with our energy markets. Natural gas is another one as well. So we're not going to see the same kind of demand for natural gas we do in UK Brent and crude, of course. It's natural gas is actually able to be developed in the US, or shall I say drawn, or whatever the technical term is there. But unlike the oil, which is all at the moment in the Middle East. So Yeah, you're not going to see the same kind of demand, but we will see demand start to bleed through into natural gas over the coming weeks as well. And we're still waiting for that break, close, and retest, and then the continuation. So, look, just wanted to get that out of the way quickly. Appreciate this is an NFP session, but news is news. It's really big news at the moment. We can't get away from it. And just wanted to give you that tiny, tiny little bit of insight there before we roll on ahead with today's main event, the non-farm payrolls. So, let's push on then. Let's have a look at the data. We've got non-farm payrolls today at 58k jobs added. That's the forecast. The prior figure was 138,000 jobs added. So we have seen what I would deem and what everybody else is deeming at the moment as stability in the US employment market. But stability has come with a price. We haven't seen a ramping up employment economy. Jobs are slowing. And we don't have that demand for new workforce, which means there is less money flowing around the economy. Cost of living crisis, less jobs equals deflation, and ultimately possibility of financial recession, which tentatively speaking we kind of already are in, but you know, it depends who you ask. Now, when it comes to the unemployment rate, we're looking at 4.3% this month, or not this month, sorry, we're working in a month in tandem here, so it's February's data. And that is the same as January. So February looking at 4.3, January's was also at 4.3. Average hourly earnings is looking at a 0.1% reduction. So the average hourly earnings in January was at 0.4. This time around, it's at 0.3. And then finally, we do actually have the inclusion of retail sales and core retail as well. We won't really pay too much attention to those, but retail sales is significantly down. It minus 0.3%. Down from a 0% figure, with core retail at 0.1. In total, looking at what we should be expecting from the data today, it's not looking very hopeful for significant amounts of market volatility, and therefore those really nice, really quick in and out trades that we so love and that we aim for. I'm not going to lie, team. It's probably going to be a non-impact event. I don't want to be the doom and gloomer. I like being optimistic when I can be. But realistically, I'm going to hit this with a different tone this week because usually with NFPs, I'm like hype, and then get really disappointed when nothing happens. This time around, I do actually believe nothing's going to happen. I think it's going to be a pretty dead one. Not only the fact that we have such more important news on the horizon here, which is going to be, obviously overshadowing the market sentiment from the NFP. But we also don't have anything of any importance happening with the NFP as far as the analysts' expectations are concerned. If we do get some kind of outlier and we get a 200k jobs added, make no mistake, there will be market volatility. Gold is going to absolutely crumble, at least temporarily. Maybe see a 100 pip move down in the space of in the blink of an eye. And we will try and get involved in some of those bits, especially in the US indices as well. US 30 Dow Jones will rally, probably get a really nice little return on that one. The NAS 100 probably be relatively unaffected. The S&P 500 definitely will see a nice rally as a result. The downside, I mean, if we get anywhere below 50k, I can't imagine it's really going to shake the markets up too much because sentiment is down. Market sentiment is very weak in terms of the US economy at the moment. So I don't think let's say market movers, for example, I don't think they're really going to be too bothered. It would probably come as a expectation to them if it gets below a 50k. So we don't really have a lot of margin here to play with. If you've got all the margin in the world to play with above 50k. But you don't really have much margin to play with below 50k. So we're only talking about, if 20 to 45k jobs added, that's going to be considered a big miss in the data. But how is that going to translate to real market price? Probably not much. So what we really, really, really want to be aiming for today, keep your fingers crossed, is a big beat in the NFP numbers. If it is anything between 40k and 100k, I genuinely don't think we are going to see too much of anything. You'll get the initial volatility strike where the rebalancing is taking place in real time just before our eyes, but it will be very, very short-lived, and we may see potentially assets whips, or we might get trapped in a couple of things today, guys. It's just the truth of it. Now, with all that out of the way, it is currently 13 minutes past 1. We've got 17 minutes to go before the event takes place. Let's source a couple of trade ideas. So we're not going to go the full breadth today, just in light of everything that's been going on. We are going to be looking at the Euro USD. We are going to be looking at gold, and then we're going to be looking at 2 of the US indices. So we're going to keep that basket of 4 potential opportunities this afternoon. On top of those 4 potential opportunities that we're going to be studying, we're going to be working out the trading plan, so on and so forth. Everyone will have every part of the process there to utilize. We are also going to be knocking that risk back down. I did initially think 0.2 was going to be satisfactory, but with everything else that's going on behind the scenes at the moment, I think to be responsible with everybody in the room, we should be bringing that risk down to 0.15 per trade. And again, similar strategy that we employed earlier in the week, going for the higher risk reward ratio, looking for those initial volatility strikes, trigger the trade into the target profit, minus the slippage. You're going to be coming away with, hopefully a couple of wins. If we finish the day 0.5% to 1% up, then great. We already landed a fantastic DAX short this morning. I know that everybody wasn't there for it, but it was actually a really nice start to the day, and that was a 1 to 3.3 return on the DAX. So we're already up a bit for those of you who were there during the European hours this morning. I appreciate it's not viable for all of you, but that was a relatively decent start. So let's move down then. Euro USD first of all here, team. So the Euro USD at the moment is trading in big liquidity. Daily time frame, nice anchor point. It's not the only one that we can utilize. As you can see here, we're trading at 115.65 currently. We do actually have some other points of interest here that we can use. So if we map out, say, I don't want to go down to this one. It seems a bit too optimistic, but that low in there. Let's go down to the 15-minute time frame, just get an idea of the size of margin that we're using for this. So that's not too bad at all, is it? You know, a jump down from what? From 115.45 to 115? That's a 40 pip trade. So I think if we get a big beat in the numbers, as we really hope we're going to, this makes perfect sense. The breaker structure for this one, initially, from an intraday perspective, day to day, I would be using 115.30. No, I'm not really fancying that one. So I'm actually going to use this area in here, which is the low of the first move, this one here. So we're going to wrap the zone around there, bring this across, and that's going to be utilized as the breaker structure for the afternoon. So then it's going to be a pending order, 0.15, entry at around 115.38, targeting I say 115, technically it's 114.976 if you want to be really, really technical about it. And the stop loss, we are going to go all in on this one, team. We're looking at a 1 to 4. And that's the kind of thing that I'm looking for. A relatively small margin to traverse for price. Hopefully, we're going to get a continuation to the downside into this afternoon's session, and just be done and just be quickly done with it. So a 1 to 4, that's going to put us, let's say, there. So a stop loss at around 115.48. Okay. Looking at about a 10 pip stop. So that's going to be the euro dollar. Next up, we're looking at gold this afternoon. Gold, unfortunately, it's looking horrible. It's looking horrendous. I wouldn't particularly like to intraday trade this if it wasn't for the news event. I mean, this is purely news event trading. Okay, there's nothing nice about this from an intraday perspective whatsoever. The breaker structure for this trading opportunity is about there. So that's where the structure is. Maybe a little bit wider. Yeah, about there. That's where the structure is for this one. The target profit, I can't help but feel it's going to be at the previous low. That's going to be about there. And that's going to be the trading margin, looking to cover off the same area that we did on Tuesday this week. So based on that, short gold from here down to here. Looking at a 5K target, looking at a 50-40 entry with the stop loss. Again, we're going to be really going all in on these trade ideas today, team. Trying to account for the slippage, be in and out of these trades as quickly as possible and coming away with a couple of greens. So we've got a stop there at around 50.53, and that's going to yield a 1 to 3.25. For a long in gold, I just can't give you one. Everybody's looking at the same chart I am. There is not gold availability here. The market has been so reactive to this point. Even in recent history, we are still coiling around it. There's no way I want to be jumping into a trade directly below. It's bad practice. So the only trade for me today on gold is short. And then moving on up to our US indices. Well, now we're only going to pick 2 of these. We're not looking to trade all 3. And I am going to be looking at buy orders for some of them as well. Say, for example, don't worry about that. That's yesterday. So let me just unanchor that as well. So, for example, in S&P 500, this is like the perfect opportunity to start buying into something. So we've got this area in here is the breaker structure. That's the structural point. Whoops, structural point. And from that point on, then we're going to be targeting up at the highs there at around 68.32. So structures there, entry just above, target just below, and stop loss just below. Sorry, beg your pardon. And we'll be looking at a 1 to. I really want to go all in on these trades today, guys. So we're maybe looking at a 1 to 4 on that one. The idea here is the market triggers the trade, and all we're doing here is we're just taking those instantaneous bars. Now, a 1 to 4 is realistically going to be worth a 1 to 2.5. You have to be prepared for that because of the slippage. So, if you get that one big volatile bar, your trading opportunity, even though you've got your entry there, is probably going to trigger it around, I don't know, 68.13, depending on how quick your broker is. My personal broker is sometimes really good, other times is really bad. The last NFP, just for perspective's sake, I actually ended up getting I think it was like a 1 to 0.13 in the euro dollar. So it was dreadful, but it's just the nature of what we're doing here, nature of the sport. So that's going to be the long in the S&P 500 today. We have the Dow Jones, which personally, from where it is at the moment, I mean, this does have the room to move, doesn't it? We have a really nice area to go back down to 47.20. Let's just check out the 4-hour time frame here. So that low is there. Nice structural point. And ultimately aiming for 47.10. Not sure. Feels a little bit optimistic, if I'm honest. But I think, we'll be holding on to this trade probably longer than the NFP session. So if we get the breakdown below, say 47.50, move back down at 47.10, I suppose it does give us the room to breathe as well, doesn't it? So let's get a target 47.11, and I'm going to go for a stop loss here at around 47.62. That's going to yield a 1 to 3.87 on the return scale, and that will be the Dow Jones. And they are a relatively strong basket of 4. I'm just going to check the USD yen. So euro dollar, we have a short. So it might be nice to short the USD yen. Reasons, because we're hedging and mitigating our risk. I don't want to get in anything that's going to be triggered by a volatility strike, though. I've got to play this right. It's a good trading margin between there. So what I'm going to do here is not have an ultra aggressive structural point for the entry. I'm actually going to use that level in there, which means the entry for this one will fall down to 157.73-ish, 72.73. And then the stop loss for this really nicely tucked in behind the scenes there at 1 to 3.8. So now we've got a short in the euro dollar, but we've also got a short in the dollar yen. Hopefully, one of them will trigger, the other one won't. And whichever one, whichever way the market goes, we're going to be on the right side of at least one trade. That is the idea. Doesn't always work out like that, but that is the idea. Okay, so I'm going to send you guys over the positions now. We are at 22 minutes past 1 in the afternoon so far. We've got 8 minutes to go until the bell rings for the NFP. So let's just take a minute here, punch some numbers in. Remember, keep that risk in check. Don't get carried away. And yeah, we'll go from there. Right, bear with me, guys. I will be back with you in a couple of moments. All right, team. that's about it. We are ready to rock and roll with time to spare this Friday as well. Usually we don't have much time to spare. But we're all good. We're all good. We're all set up. That's good. Now we have to do is hope. Dangerous term in our markets, but we have to hope that there's going to be the volatility that we want. That's what we're going to have to hope. Let's see what the DXY is up to at the moment. So DXY currently trading in 99.30. We have made no fresh highs today, but it is looking like it wants to. It's anticipating what's going to happen this afternoon. Still in demand at the moment, and trust me, this dollar index is going to rise. I would not be surprised that if in a couple of weeks' time we were trading plus 180. I really wouldn't. On our way to 101 as the demand continues and dollar purchasing power is going through the roof as more and more nations get involved with the war. I'm actually surprised it's not had more of a bullish day today, frankly. Let's have a quick scan at the. Oh, don't. Oh, it's doing that thing again. Okay. S&B's being propped up at the moment by tech services. A lot of the other sectors are really down today. Health tech is down, consumer non-durables, finance, ET for the most part. Yeah, it's looking pretty bad out there. Producer manufacturing as well. Caterpillar's one of my favorites at the moment. Really nice big AI stock, that one. You might be scratching your heads thinking, hang on a minute, isn't that construction? You're damn right, it's construction. Caterpillar are one of the leading firms that have been contracted for the mass production of AI infrastructure facilities. I'm not sure if you knew that or not, but it is. So it's a really nice opportunity, that one. Anyway, I know this isn't an equity session, but it's on my radar. I consider that one of those golden nuggets. Right, we've got a couple of minutes to go here, team. Let's bring this up. Good afternoon to you, Sarah. I see we've got quite a few more people in the room now. Abdul's here as well. Hey, Ali as well. Good to see you guys. Interesting. Didn't know that. Yeah, there you go, buddy. There you go. Obviously, we're in a bit of a mega cycle at the moment for the old AI. It is a bubble, and as we know, bubbles will burst, but I think we've still got a bit of time left before it does. And regardless of that, the contracts were already out anyway. So long as the money doesn't run out, which it won't, because all the governments are in an arms race for artificial intelligence, we should still see the demand for it. Right, guys, we've got a few seconds to go here. Let's get ready for the countdown. 5, 4, 3, 2, 1. Done. Let's see. What do we got? Okay. Oh my God. Okay, we've got a minus 92k. This is the kind of result. We were looking for, team. We've got a minus 92k figure for the non-farm payroll. Massive, massive miss in the numbers. We got a 4.4%. We got a 0.1% rise in unemployment. Got a 0.1% uptick in the average hourly earnings, but that only brings us to the same figure as the prior month. So the average hourly earnings is unchanged from January. Retail sales has risen it's gone down minus 0.2% actually from the previous 0% figure. Core retails is 0%. This is some very weak data for the US here, team. Some really, really weak data. I know I'm not streaming two screens at once. That'll be on the recording for you. But let me just take a quick snapshot of this because it is very, very weak all across the board. Don't be confused by the green prints. That is not bullish data. That is just merely saying that the real data was a beat on the analyst's expectations. Every single one of these prints is weak. There you go. So yeah, very, very weak indeed. The US 30 Dow Jones is completely unaffected at this moment in time. The S&P 500 has had much more of a dip down than the others at the moment. The S&P is leading the charge. Dow Jones is going to be a stop out. I am triggered in that one, and it is probably going to be a stop out for reasons unknown at this moment in time. Gold having a bit of a rally there as the dollar obviously declines in value. That's unsurprising, but we're clear of risk on that one, so I'm not really too fussed. The Euro USD obviously having a bit of a rise there from the weakening dollar. And then finally, our bearish USD trade was the USD versus the Japanese yen, which I am very, very pleased to say has already landed me a fair few quid in my back pocket that I can go and spend down the pub later today. The actual print for this one, though, hold your breath. So it's actually not that bad. 694. So it's not that. That's actually not that bad. It's a fair few pips away from where we were. So that 1 to 3.8 or whatever it was in the beginning is now yielded a 1 to 2.1. But that's still, around a 0.35 or 0.4 trade net return. So I'm really happy with that. That's not too bad at all, and that's exactly what we wanted to see. So a nice little win there in the USD yen this afternoon. Euro dollar, obviously, we're going to have to disavow now so we can get rid of that. There's no point having that one in there. We can get rid of that from our actual brokers as well, please, if we can all do that now. Looking at gold, possibility is for a long, which is the breaker structure point of this area in here. And then we'll be looking to take the trade back up to the big point of cash up at 51.75. So that would look like entry, target, and of course our stop loss, tucked in nicely at around 51.38 for a 1 to 3.2. The spreads are already tightening up as far as I can see here from my side, which means by the time that does prepare, it's probably going to be a pretty decent instant execution. You're going to get a good fill, and that'll yield you the full scope of that trade. I'm not saying get it in, let's do it. I want to see how things fare. I think I'm going to do it. But I'm not absolutely sure, so please don't go and punch anything in the brokers yet, in your accounts yet on that one. As far as our stocks go, very disappointing result in the US 30 Dow Jones. Completely unaffected by the data. Really big miss in the NFP numbers. I think it's just down to pure sensitivity to what else is going on at the moment. Everybody, we're talking about employment numbers in the United States. Well, who gives a damn about that when we've got the country going to war with the Middle East? And now we've just heard that more Middle Eastern nations are getting involved in it today. So I really do think it's a bit of that. I'm also a little bit surprised that we're not seeing a sell-off in the Dow Jones regardless, because no matter which angle you look at it from, the Dow Jones is in trouble, fundamentally speaking. But for whatever reason, it is doing that, and I'm not a smart enough man to be able to give you an off-the-cuff reason as to why it would be doing that at the moment. Yeah, I don't think actually I'm smart enough for the answer on that one. Just bear with me. I do have a thought here actually. No. 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 Yeah, that didn't make sense. Yeah, that doesn't make sense. Nope, I'm gonna get back in my box here, team. I'm not entirely sure what the Dow Jones up to. It's doing its thing, so we'll just count that for what it is. One of those funky ones. But that's about it, isn't it? That's really where we are. We're risk free. We took a hit in the Dow Jones, and we got a nice win in the USD yen. Obviously, we got the full scope of a 1 to 2.1 in that one, which means we made all of the money back from the US 30 Dow Jones and then a trade on top because we're earning twice as much as we're putting to risk, which is good. And that's where we are. That is where we are. Dollar index having a bit of a downturn, as can be expected. Not as significant as I would have assumed, though, right? Not as significant at all as I would have assumed. This is very big miss in the data. Very big miss in the data. Minus 92 jobs added. Down from 126 in January. That's over 200k jobs lost. Unemployment rate rises. Average hourly earnings is unchanged. Retail is down 0.2%. Core retail is steady at 0%. And the DXY's got a tiny little 15-minute candle. We opened up at 99.25. We are currently trading at 99.15. Yeah, surprising. Very surprising. There you go. I did say at the beginning of the session, didn't I? Today it'd probably be a non-impact event. I must admit that was on the basis of the data coming out correct, which it didn't, but nevertheless, it's a relative non-impact event anyway, isn't it? I don't think I am going to get stuck into that gold, guys. I've got a gut feeling. And I just think if we trigger the trade at 51.50, we're probably all going to end up with a loss in gold. I would think. I wouldn't be surprised if gold by the end of the day made it back up to 51.70, 51.80. I think that is a possibility. But realistically, the chances of us getting along in gold during our NFP trading hours now and maybe leading into the stock market open this afternoon is probably slim at best. So what we're going to do, obviously, remove that gold short. That's now invalidated. Forget the gold long at this moment in time. We're on a Friday afternoon. We don't want to be farting around with that anymore. What we are going to do is we're going to have a look at these stock markets again and try to come up with a loose plan for this afternoon's trading session. So, first of all, Dow Jones. The break of structure for this one ultimately would have been here, but we can't use this now. The secondary structural point for a long, and this is going to be a very, very short-term long, is going to be probably at about that point there. Let's just measure this out on the 1-minute chart here for a moment. Oh, that is a sad state of affairs, isn't it? It's just done nothing, has it? It's just done absolutely nothing. I'm not going to take that long in the Dow Jones. That doesn't work for me. I don't like that. I'm thinking, I don't want to buy these stock markets at the moment. I just don't want to do it. Nothing about any of the fundamentals behind the scenes shouts long. Nothing. Maybe I'll go for a secondary attempt. Go for a second attempt this afternoon. Break a structure below the lowest low. This area in here. This is not for now, by the way. This is when the US opens up. Go for a 1 to 3.5. Nice strong risk reward ratio. And then look to short the market at 230 from 47.47 down to the lows at 47.12 for the market open trade this afternoon. If the market trades lower than that at the point of open, obviously we've got an hour left. So if the market continues trading lower, what we aim to do is we aim to take the short from the structural breakout of the lowest point at that time. So let me just visualize that for you. Imagine this is the market and we're trading down and we're trading down and we're trading down. And then we get to say, this then gets to 230 or whatever. Our trading opportunity will then take place between there with a stop loss about there. Okay. And that will be the 1 to 3 that we're looking for. Yeah. So that's the kind of thing that I'm on about here. Looking at this at the moment, it does look like it wants to get going, but I'm not going to take another attempt at it now. If it didn't have that kind of volume upon the first candle of the NFP, which is the candle that has the most money in it, this is the richest candle of the move. Basically these two, let's say, and there's nothing in it. So it says to me too much uncertainty in those markets at the moment. I'd wait for the US Open, get the US traders on board. Then we're going to have the backup of all of the major firms out in the US who are going to be shorting or long in the US 30 Dow Jones. That makes it a little bit more of a probable scenario for us to make some money. US 30 Dow Jones trade, that's going to be the one. And we... NAS 100 probably. Yeah, so we got this area in here, don't we? That's the breaker structure for the long. The rate this is falling, this is just not going to be any good either. No, I'm not taking that, Naz. That's a waste of time. That's a loss waiting to happen. S&P 500 could work. We've got this level in here at the moment. Structural point, inflection. Commercial interest is 67.40. The damn market's trading down now, isn't it? 67.62. We're not going to have the room, team. We're not going to be able to fit it in this afternoon, I don't think. The only viable source of a decent trade here is on that Dow, and that's what we're going to have to hedge our bets on. I hate putting my eggs in one basket, but ultimately, that's where we are today. There's nothing I can do about it. So I'm probably going to leave that there. Non-impact event for the most part. Really nice short in the USD versus the Japanese yen, and that's the highlight of the day. Otherwise, it's been a bit of a sore experience, really, hasn't it? Always bloody is with these NFPs. Well, team, yeah. I guess, are there any questions? Got any questions for me? Or is it beer o'clock? It's certainly coming to the beer o'clock time for me, that's for sure. All good, Tony. Good man. All good, Braden. No, thank you, Max. No problem at all, sir. Dookie, all good. Thanks, Max. You are most welcome, my friend. Tony Tone, early finish, I think, soon. Yes, indeed. All good, Sarah. Great stuff. Thank you. Yeah, no problem at all, Sarah. You are most welcome. All right, then, team. Well, listen, it is what it is. We can't make these things up ahead of time. We've just got to be adaptable as always. Try to be reactionary. Follow where the money is. If the money's not there, then there's little we can do. But it's all good. Next week, I know this is an NFP specific session, but next week, let's just have a quick look at what we've got to look forward to. So on the calendar front, we have it is inflation week for the United States. So we have the full rack of inflation data on Wednesday the 11th, which we should all be looking forward to because that is always the week after an NFP, apart from 4 times the year. And it's generally a very, very promising event. I know we have had a couple of quite redundant ones, but most part, they're very fun. And then on Friday, we have the core PCE. And the personal income, personal spend for the US, which might be a little bit of fun. So we haven't got a great deal day to day, but we do have enough to look forward to next week. So let's just keep our eyes focused on that. In terms of our net returns this week, I think based on everything that we've done, just off the top of my head, we're about 2% up, maybe a touch above. I'll get all the final figures out to you guys in the end of week trading report anyway. That'll be with you in the next couple of hours. And yeah, you can have a look through that. But yeah, it's been relatively slow. As it has been so far this year. It's definitely a lot slower than it was in 2025. But we're still holding steady and we're still sort of chipping away at the blocks bit by bit. So that's going to be the thing that we hold on to. So if there's nothing else, team, that's it from me this afternoon. Thanks for joining me in this NFP session today, team, regardless of how it ended up. I hope you all have a great weekend as well. Take care of yourselves out there. Have some fun away from the screens. And I look forward to catching every single one of you lovely folks on Monday, where we can try and hit it hard and do it all over again. So take care, guys, and I'll see you then. Thanks a lot. Bye-bye.